Hello, everyone, and happy lunch hour. Thank you so much for joining our discussion series again. If you are new to our discussion series, welcome. I'm so delighted to see new faces on a Zoom here. And also, if you're live, welcome. And if you're returning to our discussion series, welcome back. It's so wonderful to have you again. We are going to continue wrap up our credit and loans part two session today. And if you have missed the part one and part two session, do please go back to our recorded videos that's on Seed Winnipeg Facebook, so you can catch up there and see what we have already covered. My name is Farahnaz, and I am the Outreach Coordinator for Recognition Counts at Seed. I do have my awesome colleague here, Jeff Patterson, and he's the Loan Coordinator for Recognition Counts at Seed Winnipeg. So again, the session will be informative and interactive, where I will provide information about credit and loans I got from Financial Consumer Agency of Canada, and Jeff will share his perspective based on his previous work experience working at financial industries for many, many years. So he has a tremendous knowledge and experience regarding credit and loans. So we are going to start our discussion here by doing our land acknowledgement first. I'm going to read it. Seed respectfully acknowledges that we live and work on the territories and homeland of Indigenous peoples, and that the land and water sustain us. We respect the treaties as intended by Indigenous peoples. It is our responsibility to understand the truth of our history, be aware of the present, and work with Indigenous peoples to make positive changes for the future. So thank you for reflecting with me. And again, thank you for joining us. Last session, we did cover a lot of information regarding credit. We covered what are credit scores, tips to maintain and improve credit score, and how often should you check your credit report, which we haven't gotten into it yet. So we did end the session with Jeff's awesome tips of how to maintain and improve credit scores. So going forward, the question is how often should I check my credit history? So we did discuss about how you can check your credit history. That was through your online banking, through credit bureaus like Equifax and TransUnion. So it really depends on you. It is recommended that you often look into your credit history through your online banking, which is more of a soft check. So I like to make sure that I check my credit history through my online banking and see everything is up to date. I'm not missing out anything. I haven't forgotten paying anything. But it's also depends on what kind of credit check you're gonna do. Like there are hard credit checks and soft credit checks, which we are going to get into it in next slide. So, but if you just wanted to look into your history, as you can do it through your online banking and to just make sure everything is up to date. But if you pull your credit history, everything maybe with your financial advisor, then in that case it is recommended to be cautious of the many number of times you're going to pull it out. At least like wait 6 months before requesting for another credit bureau, because first of all, there won't be much of a difference. Second of all, it will again go to your history when you're pulling your credit history out. So as I mentioned, promised that we're going to discuss about hard credit checks versus soft credit checks. What are they then? Hard credit check is when applying for something like loan applications, credit card application, request for credit limit increases, applications for line of credit, new utility applications, apartment rental, and many more examples like them. So it will go to your credit report. And when that hard credit checks occur, it may lower your credit scores by few points. while the soft credit check has no impact on your credit score. It will not go to your credit report. For example, if it's a pre-approved credit card limit increase, like insurance applications, account reviews by current creditors, or personal credit checks. These are considered as a soft credit check that it doesn't impact your credit score. So usually it is best when you do a hard credit check to include all the things that you need in one application. For instance, let's say you are requesting for a line of credit, and at the same time you are thinking of maybe increasing your credit card limit. It is a good idea to request your financial advisor for both of them at the same application. And that way, the financial advisor will pull only one credit check. And so instead of like doing two different application and pulling two different credit history out. So how long information stays in credit report? There are different kind of things that we can consider, like positive information. They can be kept in your credit report forever, and that's what we want. We want to show that I'm a responsible individual regarding my credit and history. And then there is a negative information. Negative information stays in your credit report for as long as 6 years. Credit checks by lenders, it varies. Equifax usually, for instance, they are keeping up to 3 years. And if there is any sort of judgments in the credit history, judgments means that there is a debt that you owe through a court due to a lawsuit. For example, if somebody sues an individual and they lose, then the debt may show up in their credit report. So they can stay up to 7 years in their history. And then there is debt management. And what does that mean? That means like debt management plans is an informal proposal where your credit counselor makes to your creditors on your behalf. And it allows you to consolidate your debts into one affordable monthly payment, and all records from a debt management plan are erased from both your credit reports 2 years after your debts are paid off. And then there is a consumer proposals, which is a legal agreement set up by a licensed insolvency trustee. And the trustee creates a proposal for your creditors where they agree to let you pay off a percentage of your debt. Equifax usually removes a consumer proposal from an individual's credit report 3 years after they pay off all the debts included in the proposals. But a transit union removes a consumer proposal from their individual's credit report either 3 years after they pay off all the debts or 6 years after they sign the proposal. So it depends on whichever is sooner they're going to choose that, which is good. And then there is a bankruptcy, and bankruptcy is when a person or business they're not able to repay their debts. It will be removed from their credit report 6 years after the date they discharge. But in some province, it might be around 7 years. So those are the few last slides that was remained from our last session from credit and loans part 2. If you have any question that we weren't able to cover in any of those sessions, and if there's any other question that you want to ask about credit and loans in general, whatever topics we covered, do please ask from Jeff while I am going to pull up our presentation for credit cards so we can discuss about credit cards today. And Jeff, do you have anything that I didn't cover or anything that you want to touch base that I wasn't able to fully cover it?
No, I think that was a good overview. So yeah, while Farnaz is pulling up the next discussion series presentation, does anybody have any general questions about credit in Canada?
Hello, everybody.
Hi.
Thank you so much. Thank you so much for your presentation. I think I have some question, but first of all, I prefer to see other session that you proposed in the Facebook. So I think I have some general question. For example, how we can grow up the credit card score and what is the advantages of disadvantages of some, for example, active about credit cards. So I think it's good to see. And I have a question. Is this session is continue for next week?
Our discussion series is on a monthly basis, so it's usually on the first Tuesday of the month. I mean, might not always be that way, but that's sort of the pattern that we've been following recently. I put links to the last two discussion series recordings in the chat, so you can definitely check those out. And the questions that you're asking will definitely be answered in those videos. I'm 99% sure about that. But just very briefly, to establish credit, it's about utilizing different types of credit and having experience with those different types of credit over time. So it's just one of those things that you're going to accumulate as you start to use credit and whatnot. And as we get into the credit card discussion that's coming up next, a credit card is a really good way, a really good entry point to start building credit history in Canada. Yeah, and then I would just say beyond that, if you watch those videos and the questions that you have aren't answered by those videos, then let's look at having a financial empowerment one-on-one coaching session or something like that, where we can work through those questions and give you helpful advice and links to other resources that can help you as you navigate and understand finance in Canada.
Yes, and I have a question. Now we are on the under work for permit in Canada. Yes, and so we have a secured credit card. My question is about is the law is the law for secure credit card is the same as the for example unlimited credit card?
There, I'm not familiar with any rules pertaining to secured credit cards, so I'm not aware of any rules. It's not to say that there isn't one, but it's more common that a credit card issuer will have its own policies with regards to how it's going to offer secured credit. So secured credit is really just the idea that you are pledging some type of collateral towards that credit card, which is uncommon. Usually with a credit card, there is no security behind it. You don't have to pledge cash or a house or a car or anything like that. But for folks that might have a blemished credit history or might be brand new to credit with and that credit card issuer may have requirements in order to access their credit card. If you don't meet those requirements, then they might ask you to do a secured credit card. But I don't believe secured credit cards are legislated. Credit card, like the legislation that impacts credit cards is more things like the Interest Rate Act, the Competitiveness Act, and the Bank of Canada, not Bank of Canada, but the Bank Act, things like that. There isn't a piece of legislation that I'm aware of that is specific to credit cards themselves.
Okay, thank you.
You're welcome.
And that's a great question, Henny. Thank you so much, Jeff, for such a great answer. There are a few little points that I'm also going to add on based on my experience, as well as the secured credit card versus the regular credit card. As Jeff mentioned, that there is a collateral against it. That means that certain funds, to put it in a very simplified wording, certain amount of asset or funds will be saved as like an investment account, and then you will be able to against that credit card, so you can use that credit card. And usually for newcomers it's used because they don't have, we have already covered some points in the past discussion series, because they don't have any credit history. They are trying to go through settlement. So as Jeff mentioned, they are brand new. So that's why the secured credit card is used. But there is no difference in the way you are building credit credit history or credit score compared to a regular one, there's no difference. You can still build a as long as you make sure that you are responsible towards it, you're still gonna build a good credit history, and everything works exactly the same. It's just the difference is that let's say $1,000 secured credit card you have received, they have taken that another $1,000 from you, put it as an investment account for a year, and then they wanted to observe and see how are you gonna use your credit card until your status, maybe someone's status of an immigration changes, and then they're going to release the funds. Then you will be able to receive the funds without any problem, and you keep up using your credit card. So there's nothing to be nervous or anything.
Yes.
You can still build this same credit
Yes,
history.
and the history of secure card transfer after, for example, we can get PR. The history of secure card transfer to the general credit card.
So how does like credit history works? This, as soon as you're in Canada and you start using, let's say, credit card, or you have certain loan, you build credit history. It will never go away. It will be in your record forever. As we
Yes.
mentioned, like in previous slides, based on what kind of transaction is that, or what kind of situation is that, your history will stay. If it's positive, will stay forever. If it's negative, as we talked in few previous
Okay.
slides, based on those, like based on the situation, it will either go away a certain period of time, or you keep building it. Basically, you're not gonna like lose it.
Thank you.
You're very welcome. All right, if we don't have anything else, Jeff, is there anything else that I missed? Oh,
Nope.
10
And I
minutes
think we should
left.
move on because we've only got 10 minutes left in our session today. So
We
we
do.
should get to credit cards.
All right, so let's quickly start our credit cards, and I will also make sure that Jeff, please keep me on time. Once it's 5 to 12:30, please do let me know so we can open the floor for everyone if they have any question, as well as because, and the other thing, our session is every month, the first Wednesday of every month from 12 to 12:30. So it's just 30 minutes of a session during lunch hour. We will give you the January off so we can celebrate all the holidays and vacation and our family time. So we won't be doing this on January, but we will be doing a follow-up for credit card part 2 on February. So for this presentation, we will be covering how credit cards work, types of credit cards, and your rights and responsibilities. So credit cards and how they work. So first of all, a credit card is a card that lends you a limited amount of money to pay for goods and services, and you must pay the money back by a certain date. The key differences, I know that there are many different types of credit cards, and the key differences are between credit cards are the interest rates, the fees, and the rewards and benefits. So in the future session, we will also look into the different types of credit cards. By the way, I got all the information from Financial Consumer Agency of Canada, and they do have a tool where you can choose, you can do a comparison of credit cards and see which one works best in your situation. There's a very short questionnaire that you gotta answer, and then it will recommend which one would be the best for you and based on your situation. So we are gonna do a role play with Jeff. Jeff and I, we will do a role play in our next session and see how does it work. Types of credit card transaction. You can use your credit card to pay for goods or services at any point of sale, like a cash register or checkout. You can use it over the phone, you can use it online, or you can use it by mail. So nowadays, a lot of transactions happens. Certain places, they don't accept cash. They prefer credit cards, but certain places they still accept cash. And if you they also accept credit cards, however, they might charge certain amount of fees. In that case, I personally prefer to use cash so I don't have to pay certain percentage of fees on that. And I usually, if I'm not sure of I'm not sure of that, then I ask the merchant and ask like, if is there any certain fees that I will be paying if I use my credit card, and then making sure I'm not paying any extra fees. So it's also recommended to keep receipts for all your credit card purchases. So you can check your receipt against your credit card statement to make sure there are no mistakes. And if you find any mistake, immediately contact the merchant and the business that sold you goods or services. They can correct the transaction. If the merchant weren't able to correct the transaction, directly contact your financial institution for assistance. Jeff, do you have any other tips, anything that I missed in here?
No, I don't think so. We were talking a little bit earlier about just like being mindful about how to make purchases and where to make purchases from. So doing things like making sure that who you're making a purchase from is reputable, that if you're making a purchase online, that they're using encryption, or you're using a third-party service provider like PayPal, for example, to protect your credit card information. Your credit card information is sensitive information, it's sensitive financial information, and so you don't want to share that with people that you don't trust. And that would include retailers and merchants and whatnot. So before you give your credit card information, whether it's on the computer, on the phone, or on a piece of paper in a form or application, you want to make sure that the entity that you're dealing with is trustworthy. And there's information about that consumer protection and awareness, either on the province of Manitoba Consumer Protection and Awareness website, and also the Financial Consumer Agency of Canada, FCAC, has consumer protection and awareness tips too. So we won't go into a lot of detail on that today, but there are definitely resources out there to help ensure that you conduct your transactions safely.
Wonderful. Thank you, Jeff. Do we have time for another slide to start? Cash advance?
We're right at 12:25, so I think we could probably do one more slide and then see if we've got questions.
Sure thing. So this slide, cash advance, what does that mean? So certain time, not certain time, always you can take cash out of your credit card, and which is called cash advance. And you can use a credit card to get a cash by taking it out from ATM, which is automatic teller machine, or you can go to inside the financial institution, your branch, and ask for a cash advance. But keep in mind there is certain fees with it associated. Personally, I will never recommend you getting any sort of cash out of your credit card, because first of all, they are going to charge you a certain cash advance fees right away, as well as your interest rate increases right away. So let's say if the credit card you have, the interest rate is 19%, it would automatically jump into 22% the same day, and it will charge you interest daily until you pay off the entire balance. So what does that mean? Let's say I have a credit card limit of 2,000 and I receive a cash. I have already used $1,000 from my credit card, and I go and get a cash of $100 from my credit card. So now my balance is 1,100 out of 2,000. So now I'm paying a 22% interest on that 1,100 instead of that 100 I took cash. So it is very, be cautious of taking cash out of your credit card when you need it. So before you take out a cash advance, consider a cheaper way to borrow. Like maybe if it's better idea you can apply for a personal loan or a line of credit. And that way you don't have to pay extra fee, as well as the interest is set. The interest wouldn't change as high as cash advance. And it will be very challenging to actually pay off the entire balance on your credit card if your interest is to 22%. And each time if you don't do your payment, your interest keeps going up and up and up. That basically it will put you in a very hard situation to actually pay it back. Jeff, anything I missed?
The only thing I'd add to that is that oftentimes there's also a cash advance fee. So cash advances, you can do them in the branch. I think most of the time people do it at an ATM. And so when you do a cash advance at an ATM, yes, you're paying interest on whatever you've withdrawn immediately, just like Farnaz said. Yes, the interest rate is higher than a purchase. Cash advance interest rate is almost always higher than the purchase interest rate. There might be a fee from the ATM. The ATM might charge you a fee. Just like if you use your debit card in an ATM that's not your primary financial institution, they would charge you a fee. You might have to pay that fee with a cash advance on a credit card. And your credit card provider might charge a one-time fee for doing that cash advance. And that fee could be a percentage of the amount. It could be a fixed dollar amount like $5, or it could be a mixture of the two. So it's always important to make sure that you read all the terms and conditions, all the literature that comes with your credit card. I know it always seems like a lot, and it's in small print, and it's got language that we don't always understand. But it's important to understand what those fees and charges are so that you're not caught by surprise later on by using a service that ends up being more expensive than you thought it would be.
Thank you, Jeff. All right, so let's open the floor to our participants here and whoever is joining us live on Facebook. Do you have any question from any slides that we discussed about, or if you have any question regarding credit and loans in Canada? You have 1 minute to ask.
And if you're on Facebook, you can use the live chat feature to ask your question, and we'll see it and be able to respond verbally.
Okay.
Hi, Majid.
Hi. I have a question. I have heard that the base that your credit I don't know, history is evaluated is that you are better not to use more than 30% of the credit limit you have. I don't know, during a month. Is it right?
Jeff, would you like to take on that?
Sure. Yeah, yes. Although I think you have the numbers reversed. It's like if you have a credit card that's $1,000, you don't want the usage or the balance on that credit card to be more than about 70% of the limit. So you want to leave 30% available. 30% of whatever your limit is available. I used $1,000 because the math is easy. But whatever your limit is, if it's $2,500, then whatever 75%, or pardon me, 70% of $2,500 is, try to keep your limit at that amount or lower. Otherwise, if your credit card balance is closer, the closer it gets to the limit, the more it looks like you have to use that credit. That you may be supplementing your income with that credit or something like that. So that's why we recommend, financial coaches and advisors and things like that will recommend to keep your balance less than the limit. That also helps you from a financial security standpoint, in that if you leave that 30% available all the time, then you've got that available for use in an emergency. If an emergency comes up down the road. I mean, obviously a personal savings account is a better emergency fund than a credit card, no doubt. But if you don't have a personal emergency fund, then having that amount available on the credit card could be a potential alternative to that.
And my tip is usually adding on what Jeff also mentioned is I use my credit card based on what I have in my checking account. If I don't have the money in my checking account to pay it back right away, then I get in trouble. So I make sure I don't use my credit card anything over than what I have accessed in my checking account.
That's a good tip.
Okay, thank you.
You're welcome, Majid. That was a great question. Vikas, you had a question?
Yeah, sorry, I joined late. I hope
That's
you can
okay.
hear me. Okay.
Yes.
So, I have a question, but it's not related to credit card. Farhana, as you mentioned about line of credit when you were explaining about the cash advance. So I have a question about line of credit, if you allow me. Otherwise, I can leave to anybody else if they have any question about credit card.
Yeah, sure. You can ask. If no one has any question from what we discussed, then
Sure.
Vikas, you can ask that. Are we all good? Vikas, it's all yours.
Okay, let
Although
me.
in the future, we will definitely cover line of credit as well when we are in the loan section. Right now, we are more of in a credit card section, but go ahead and ask your question. We'll definitely discuss about it briefly today.
Thank you for that. So I have few questions related to line of credit. One, what's the purpose? And second, do we really opt for line of credit? And what's the rate of interest on line of credit if I use money of that? And what are the possible purposes I can use that money for?
Jeff, would you like to take over?
Sure. So yeah, just really briefly, a line of credit gives you the advantage over a loan. Well, there's two major advantages. One advantage over a loan is that you don't have to keep reapplying for credit. So as you use a line of credit and then pay it back, you don't have to reapply to use it again. It's there for you to use, so it's convenient. And the other major advantage is that line of credit usually has a lower interest rate compared to a loan. But it depends on the security and your credit history, your character and your net worth and all those kinds of things too. So the interest rate on a line of credit, generally speaking, is lower than a loan or a credit card. As to what exactly the interest rate is, it depends on your financial institution, your credit history, the security you're providing, and the purpose of the line of credit. So typical purposes of line of credit are usually, you might have a personal line of credit, which could be for emergencies, it could be for home renovations, it could be just to help with cash flow issues. A student line of credit is another common type of line of credit, which is to provide financing for a child to go to university or college or something like that, post-secondary education. And then a third common line of credit is a home equity line of credit, or HELOC for short. And those are lines of credit that are secured by a person's primary residence. And so they afford even more flexibility with regards to payment amount and lower interest rate. Although they do come with some additional fees and things like that too. So yeah, the best thing to do to explore lines of credit would be really to talk to your financial institution about it, because they're going to be able to tell you the specifics about how their products work. And once you learn the details about those lines of credit at your financial institution, what I would do is I would pick maybe one or two other financial institutions and ask them the same questions. That way you can compare the different products and services that different financial institutions provide. And at the same time, you'll also get to know a little bit about how those different financial institutions interact with their clients and their customers. And so what you might find is that another financial institution you have a better rapport with, or they might have more favorable terms and conditions than what your current financial institution is offering. And so a lot of people feel like they get stuck in a bank and that they don't have any choice to change that bank after they've started a relationship with one. And that's not the case in Canada. You can change your banking relationship anytime that you want. And so I encourage you to explore banks and credit unions and learn about them, and choose a financial institution that fits within your personal values and also is convenient and safe and easy to use, and doesn't charge you a lot of fees and charges for doing business with them.
So is there any relationship with the bank already required in order to have the line of credit? Or we can go to the bank only for the line of credit to get.
Yeah, you can apply to any bank or credit union. I mean, as long as they're open to receiving applications from the general
Okay.
public, which would be most businesses. They want your business, right? They want your business. So they
Yeah.
want people to make applications with them. They
Okay.
want you to borrow with them, because when you borrow, they charge you interest, and that's how they make money. Is
Okay.
they charge you interest, and that profit that they make on lending money is then paid out to investors that have deposits at the bank or credit union in the form of interest on bank accounts and GIC investments and things like that. And the difference, the spread between what they charge in interest on loans and what they pay out in investments, is their profit margin.
Okay. Thank you
So
very
yeah,
much, Jeff.
yeah, I think you could
Yeah.
definitely do that. I mean, there's also the relationship piece, right? Like the more
Yeah.
business that you have with a particular financial institution, the more likely, all other
Mm.
things being equal, the more likely you are to receive more favorable terms and conditions from them. But banks are businesses too, right? And so their requirements or the way that they do business changes depending on what's happening in the market. So while a bank or credit union might behave in a certain way during a certain economic period, when that economic period changes, then they might change how they do business. And that might create opportunities for consumers.
Got you.
That's
Thank you,
great.
Jeff.
Thank you, Vikas, for your question, and thank you, Jeff, for the great answer there. Again, as Jeff mentioned, the line of credit is based on what is your purpose. I personally like to have it as an emergency purpose. It's on the side of my account because I'm not using it, but it's there. If certain emergency happens, I can take the money out anytime I want it. While if I am facing some sort of hardship, I don't have enough funds there, and I'm running behind certain financial institution to give me funds for line of credit, let's say, it's harder to take it right away. So I do like to, I have locked certain amount that's under my line of credit, although I don't need it. And plus, the good thing about line of credit, it doesn't charge you anything unless you start using it. So it's just on the side of your account. All right, so we will wrap up our session today right here. We are over 9 minutes. Thank you all for joining us and staying with us longer than usual. If you have any question that we couldn't answer, do please either call me or Jeff or email us however you prefer. We are more than happy to set up a one-on-one session if you're thinking of, oh, I can't ask this question, it's more personal. We are more than happy to discuss further. Just join us, connect with us however you prefer. Other than that, we'll see you on February. And happy
Thank you so much.
holidays. You're
Thank you for
welcome.
that.
And
Thank you,
Thank you.
Jeff.
Have a nice
see
day.
you. Bye-bye.
Enjoy
See
it.
y'all
Bye.
next year.
Bye.
Happy New Year.
Bye. Happy
Happy New Year.
holidays.
Bye.
Bye-bye. I'm gonna stop recording here.